Hi, this is Zach Meir from Zach's Traders Cafe with a look at some bulletin board hero stocks on Wednesday, the 6th of July. Starting off with Ariana Resources, and here we see a mid-move consolidation over the last couple of months, based largely on the 50-day moving average at 1.48 pence, that's the blue line, and the floor of this rising October trend channel. Top of the channel heading towards 2.3, 2.4 pence, and that's the target while we hold above, let's say, the 1.4 pence zone. RSI just bounced back above neutral 50, which should provide decent momentum. If you're cautious on the shares, maybe wait for recent resistance at 1.75 pence to clear before pressing the buy button. Next stock is one which looks as though it's starting to base out very nicely. Aureus Mining, we just pierced the 50-day moving average in yesterday's session at 4.17 pence, and view here really is that while we hold above the floor of this rising trend channel from the beginning of the year at 3.8 pence, that's roughly the 20-day moving average level, we should head significantly higher. Favored target here as high as 10 pence, which is the 2016 resistance line projection. That would clear, or actually would equal, that March intraday peak. Stop loss only really back below the 3.8 pence level. RSI very encouraging as well, with these multiple rebounds or bounces off neutral 50 over the course of June. So that should be a leading indicator on a significant fresh upside. Next up, CloudTag, where we bounced off the 50-day moving average and the floor of this rising February trend channel at 4.08 pence, while above the 4 pence zone. The target here as high as 7 pence plus, which is the February resistance line projection. If you're cautious on the shares, maybe just wait for the 10-day moving average at 4.96 pence to be broken on an end-of-day close basis. So we just had some resistance up near 5 pence so far in July. A good-looking chart is coming up now in the form of Finhouse Mining, extended break to the upside that we've seen over the last 6 months and more. A decent break above the 50-day moving average at 4.88 pence yesterday, and really while we hold above that 50-day line, the share should surge towards 7.5 pence, that January resistance line projection. At this stage, only back below 4 pence. This the floor of this broadening triangle since the beginning of the year would really question the upside scenario. RSI at 59, just getting underway as far as the decent momentum is concerned. Beautiful chart here in the form of Mariana Resources. Similar situation to that at Finhouse Mining, maybe, well, perhaps actually rather better. We have this bull flag above former resistance at 40 pence to start or to end June, and a bull flag breakout for the beginning of July. Target here, even after all the gains, could still be as high as 65 pence or even 70 pence at the top of this broadening April triangle. Any dips towards the 45 pence zone currently regarded as a buying opportunity, and only back below 40 pence really delays or questions the upside scenario. Next up, another encouraging situation. Uptala Resources looks as though we're in a mid-move consolidation here, based around 8 pence, and while we're above that, the top of this rising April trend channel, 11 pence, could be on its way. If you want a momentum buy trigger, you wait for an end-of-day close above the 50-day moving average at 8.4 pence before going long. Petroneft is not a stock I've looked at very often here, but well worth looking at now. Gap through the 50-day moving average at 2.05 pence after an extended falling wedge basing here. Should be some decent momentum coming through here and take the shares back up to where they were in November at 3 to 3.5 pence over the next month or so. Stop loss back below stop loss really back below the 50-day moving average and below 2 pence. Should be sufficient. On to a couple of stocks more to go. Stock which has got a similar falling wedge configuration to Petroneft, that's Prospex Oil and Gas. Here we're just rebounding within this falling wedge from March, End of day close above the 50-day moving average at 1.18 pence should take the shares back up towards the 2 pence zone, which is the major resistance here at Prospex, and stop loss really back below 0.8 pence should cover any, well, actually even 0.9 pence should probably get away with for the shares, given the double bottom for May and June in that zone. Finishing off with Zoo Digital, which I haven't looked at for quite a while, but decent bear trap rebound here from below the 200-day moving average, the black line around 8.7 pence, and really while we hold above that, looking for a target as high as 14 pence at the top of this rising trend channel from August last year. That's it from me. More updates at the same time tomorrow.